Hello traders, welcome back to episode 26. So in this episode, I'm just going to go a bit more in depth of the pattern failure because by now I'm sure you're aware of how to effectively spot the trade. So I'm just going to look at this period of price action on euro dollar and just examine it in a bit more depth as it does contain the pattern failure that you are most likely to see in all examples when using my strategy. So we can see in this example here we've got a nice bearish range, and then we're going to zoom down and show you the red flags to look out for. So very similar to what we've done with Aussie dollar in the previous episode. So you can see we've got this bearish range, so let's just look through here. So we won't really count this beginning bit as it was the kind of just when it was breaking out of a previous pattern here. So let's just align that for you. So we just broke out of this previous pattern, had a breakout retest. If you really do want to apply that fib there, then you can see that is a, yeah, let's just keep everything included. Let's not skim anything. Then you can see that is around a, for me, 38.2. So let's just get that in there now, 38.2%. And that's our bearish one to start. Okay, so that starts off our shift in structure right here. So we're going to say that's our first pullback. So swing high, swing low, 38.2 pullback. So now effectively we do almost have a level of break retest continuation in this zone right here. So from that candle close down to the low of this candle right here, so we've got a nice break, a retest of this level, and then we've got a continuation. So let's have a look at this as well. So we see here A, B. So on this occasion we have just say 87%. That was the highest fib level that it went up to. So 87%. Just to let you guys understand the structure again. 87%. Price came back down, made that new low. So when we talk about this area here, so we can see this is more 4-hour trading. This isn't really daily trading, but it is a consolidation, a break, obviously retest of that level, and then we continue down again. So it is a valid level if you do want to include it, as the structure is still bearish anyway. Actually, this is, I've just had another look in my mind. Yeah, this is a good example. So you can see we've got a high, we've got a low, we've got a lower high, and at this point right here, we failed to make a lower low. So we should have seen price actually come back down here on its first attempt. The reason why this edge was still valid is because your market structure, so this is the high of your market structure where price should not get back above. So let's just turn that green so you understand. If we get back above this, so any price trading above this area now is going to be viewed as bullish. Until we're there, everything is viewed as bearish. So let's just keep it red so it's just easier on the mind. So everything is viewed as bearish. So even though we did make that higher low here, until price gets back above this area here, we still have to maintain our downside view. So then when we go back here again from our high down to our low, we see we had a 50% pullback right here. So 50%, get this here, 50% pullback. Let's take this out again. So 50% pullback. So now understand your level has now changed. So your level of invalidation is going to continue to change. So now it's here. Price now, if price gets back above this region, now we're looking at prices potentially reversing. So we got another break and retest coming into play here. So it's pretty straightforward. So you see we've got a nice break, retest, continuation. So we look at our A, we go down to our B. What do we have here? 74% pullback. So let's just move that here. 74.4%. Okay, so right now you can see the way this is all aligning nicely with our overall bearish structure. So I'm just keeping it very simple. So all overall with our bearish structure. Okay, so once we get down to here now, So this is now the area that price shouldn't break above, because this is our previous lower high now. So where we've seen this A, B, so on this occasion stop loss would have been hit. So here SL hit, because we would have been looking for shorts which didn't come through, so SL would have been hit. But what we've seen now is a break in structure, so we shouldn't have seen price trade above this area. So that is your first red flag. Price shouldn't have been trading above this area. We then got our double top reversal, which then saw a minor time where price reversed back. But like I said, price shouldn't have traded above this area. So this is showing just like Aussie dollar, but just a little bit variant because it is euro dollar, so they all have their different characteristics of how price moves. But you see here now we've got a level where price failed. So when we go to the weekly chart, you'll see it's wicks. So price failed to close below this area. So when you have to understand what time frame you're talking about, because obviously on the daily it did close below, but where we got our daily fib, so our daily fib would have been obviously from this point here, and then your invalidation is like that. But I'm just sticking to more, sorry, 4 hour, but I'm just sticking to more of a higher time frame structure. But I will dive in after to the reversal zone to give you guys the clues. But yeah, so right now when price trades above this area here, this now is a reversal. Market structure is broken, so we're seeing a reversal from bearish to bullish. When we put back in our standard technical analysis in the form of a bearish trend, so you can see here we've now broken out of this area, broken market structure, and made a new high. So we're now looking for buys. When we go back into this low here, A, then we're looking at B, and then we see that target here. So what we see here is 66% pullback, which is now green. So we see the 66% pullback. Have a look at structure again with this low here now. Zoom this low across. So this became like a pivot point. So we've seen our 66% pullback here. Became a pivot point again. Price shouldn't get back above this area. When we apply our fib A, B, C, what do we see now? Market's trending very similar to Aussie dollar, what we saw on Aussie dollar, 50%. Then we apply our low again, A up to our B. So then here we saw 82.8% pullback. And then now let's have a look at our fib again, A, B, C, which now we seem to be around our 66.6% pullback. So already we look like we're starting to reject from this area. So where is our target? So I'm just going to outline our target. So our Fibonacci says our target is going to be here. Let's take off this and go back to our weekly chart. So when we look at our overall weekly time frame, our level of invalidation for this overall weekly setup is going to be this high here. So let's just take this off. Price shouldn't be trading back above that level. When we go back to our daily, you can see we've had a little bit of structure go back through, but because we've broken market structure, remember what that means, we've broken market structure. For me, it's just going to be a pullback before price continues. When we go down into a 4 hour and examine price in a bit more depth, then you can see everywhere where you're seeing those pullbacks nicely. This becomes your pivot area. You see the reversal in here as well in the form of this ABC. Yeah, so I'll explain this daily level as well. So you can see here consolidation, price breaks out, further break, retest, continuation. We drop down again. So on this area here of this break, retest, continuation here, we shouldn't see price get back above this region. So then when we see that A, B, C, So we see you got to keep following price closely when you're using this. So ABC, that would have been that 23. Then we see here ABC, that would have been nearly 78, 86, 87. ABC, you see we reject, but what happened? Price failed to make a new low, and then on top of that we've got our inverse head and shoulder. So this is when you're getting really close into price now. So you got your inverse head and shoulders. Price is broken outside of that in that reversal, and of course now structure shift has happened because now we're going this way. And then you see what happens. Price made that higher low reversal pattern. We break above the high we're not meant to, which is a break in market structure. We come back down and retest that area, and then what happens is we continue to keep that retest going on here. So if you zoom this out, you can see here, breaks that area it's not meant to, continues going higher, and we continue to make that structure, those structure highs and lows, until eventually price fails, goes, trades below it, comes back up to it. So price action is not always what you expect. So typical retail that you get taught, they just think it's going to be always perfect, break, retest, continuation, break, retest, continuation. That is just a form of price that you want to see. You just want to see that movement. It doesn't matter what happens. You just want to see that movement. It's not necessarily so much going to always be that line. It's just that's the movement you want to see. So once you trade below that price, then we saw the unwinding. Then we see structure shift again. So you see here, same thing again. Structure pulls back up, breaks above it. Then we start doing the exact same thing again while we was in that range. See right there, we came back up, dipped below. So price shouldn't have broken that low. Double top, dips below, and now price structure shifts again. We see the shift, we see the shift. It's always the same. Price bottoms out, makes a high, then you see it pulls back up to it, takes off, has that structure shift that it shouldn't break, which is here, breaks that low, sells off again. Same exact thing here, has that high it shouldn't break, breaks above it, pulls back different, goes up. This time price didn't quite stay below that level, so we're looking at daily now. Then we see we break higher, come back up, retest it, break higher. This time we break below it, old support turns in, old resistance turns into support, retest, structure shifts, same exact thing here again. So you're always going to see the same thing. That low comes in, we break above, retest, and you see price sell off, but we ended up breaking below. So for me right now, it just depends on whether or not price trades below this level. So the fib that we're looking at is here. We shouldn't see price trade below 1.06 if we're going to stay in alignment with this bullish market structure, that we've got now. And that's what you'd be looking at. So when you look at overall price action, you can see where the moves come from. They all take place at the same time. How it happens is different, but the market always reacts the same. So I hope this video made sense to you, and we're going to move on to our next episode, which is going to include a few MetaTrader tools that I use, and then we'll take it from there. Thanks for watching, guys.